Are you keeping all of your money in one bank account? Welcome back to the channel. I'm Mike the Credit Guy, the biggest. If this is your first time to the channel, make sure to hit that subscribe button. That way you find out every time we drop new content, you're gonna hear about it first. We talk about everything credit and finance on this channel, okay? So make sure that you hit that like button also. Hitting that like button, make sure that it gets out to more people out in the community so more people can learn about proper banking. We are going to cover how to bank properly with this craziness that's going on in the world, okay? Now, in case you didn't know, I am the owner and founder of Limitless Culture. We created the most advanced DIY program in the industry. At $55.99 a month, our system will create custom Metro 2 attack letters attacking negative, inaccurate items on your credit reports, including negative accounts and your personal information that is inaccurate and incomplete. All will be created and delivered to you to your email. You print the letters, you mail them out certified mail, and you're done. It's just that simple. No more template letters, no more cookie cutter anything. We cut all that nonsense out. You do not have to learn any credit modules or take any master classes or join any Facebook groups to become some type of guru to learn how to work on your credit. Our system will create custom Metro 2 attack letters. They will be emailed to your email. You print them, mail them out, certified mail, and you're done. It's just that simple. Okay, link is always going to be in the description. That's where you can find it to get started and working on your credit. We are going to talk about this massive collapse of Silicon Valley Bank and how it's going to affect all of you guys, consumers, because that's the first thing that people are going to ask. Is this going to affect me? What does this matter? Does it mean anything? Yes and no. There's a lot of things that I'm going to cover and how to properly bank. Okay, we're going to cover all that on today's episode. So I'm going to put it up on the screen here. As you all may know, it's been all over the news. Everything going on with the largest bank collapse in American history was Silicon Valley. They went under on Friday afternoon or Friday morning, something like that. So a lot of things have been going on, and a lot of people are wondering, is my money safe in the bank? Yes and no is what I say. Okay, I'm just going to be honest with you. Now, SVB is going to have a ripple effect. The FDIC is stating that they are going to step in and people are going to be able to get their deposits. They're not saying if it's up to $250,000 because I don't know if anybody knows this, but every single bank account that you have with a regular banking institution is backed by the FDIC up to $250,000. Anything past that is like poof, it's gone. Okay, that's in all reality. That's how it's supposed to work. Okay, which is kind of crazy because if you think about it, you're like, okay, so why am I putting my money in this bank? Really, the reason why you're putting your money in a bank is for two reasons. One, to keep it in a safe place, okay? And then to also establish a banking relationship with some type of banking institution. That is the real reason why you put it in there. Now, this situation with Silicon Valley is going to have some type of ripple effect. We do not know exactly what yet because the FDIC is vowing and stepping in to take care of this and get everyone their money. But this is going to have a huge effect on the economy if a lot of these startup fintech companies cannot pay their actual team. If they can't get their money, operating capital is huge. We have to keep a certain amount of money in the bank at all times as operating capital. So if they don't have that operating capital to move forward, there might be some massive layoffs going across the United States for a lot of these fintech companies. And it's also being affected in the UK. So the UK government is actually having to step in to help them in the same sense that the FDIC is doing in the United States. So the question comes to us, how is this going to affect us? We do not know exactly yet, okay? So don't panic and don't go to the bank and start pulling all your money out, okay? The big conglomerate banks like Chase Bank, Bank of America, Wells Fargo, all those big banks are perfectly fine right now. So don't freak out and go start taking your money out. This is what we call a bank run. Essentially what happened here, I'm going to try to break it down real quick. The CEOs all knew something was going on. You're all going to see this on the news. They pulled their money out, and then they told other people. Okay, then those other people started making bank runs. Those people told other people. Then people showed up, and there was not enough money to give everyone out of the bank. Okay, there's a lot of things that go on behind the scenes. I'm not going to get into it, but now it's important to talk about your banking relationships and how you can keep your money safe so you don't have to worry about these types of situations and what happens if this does happen to you. So this is really important to understand what people don't understand about the FDIC, okay? The FDIC is going to keep a certain amount of money, okay, that is going to be saved up in case something like this happens. Now, what has happened is they have to liquidate, okay, all of the assets from the bank to recoup that money. And then if they can't, then FDIC will step in to put in whatever the difference is or whatever, okay? Historically speaking, I have a friend that went through this in 2008, and he lost a lot of money, okay? He was involved in some transactions with the bank. He had over $250,000 in the bank. Now, he was able to recoup the $250,000. It took them 8 years to give him his money. He was just randomly getting checks in the mail from the FDIC, one in 6 months, one in a year, one in 2 years, and eventually it all totaled up to the $250,000, but he lost a lot of other money on top of that, never to be seen again, okay? So right now the FDIC is claiming to give all of their depositors their money back in whole. How are they going to do this? I don't know. They're saying it's not going to affect the taxpayers. I'm like, okay, so where are we getting the money from? Because the FDIC only holds a certain amount of money. They don't have like this stockpile that everyone thinks that they do. I think it's like 1.8 billion that they have. What's this company called again? Silicon lost way more than that. So it's going to be really interesting to see how it happens. But it's really important to understand, ladies and gentlemen, yes, you are covered in a traditional bank up to $250,000. And in a credit union, you're also covered up to $250,000. Credit unions are not covered under the FDIC. They are covered through a different entity. Okay, but the FDIC is not. How should I say is the best way to say it? They're not responsible for getting all the money at one time. And then if it takes time, guess what? They don't give you any interest on that money. It's just they give you whatever money they can as a lot of time goes on. So as an example, like I said, my friend, it took him 8 years to get that money back. Luckily, he was in a position where it didn't affect his business. But a lot of these people, now they're saying they're going to give them all their money back. There was another bank that fell, which is Republic. So I want you to understand it's up to $250,000. But it does not mean that you're going to get all of that money at one time. There's a lot of confusion that's going on about this, so I just want to clear that up. That's historically speaking, that's how that has happened. If you haven't already, hit that subscribe button. That way you find out every time I go live or I drop new content, you're gonna hear about it first. Drop some emojis in the comment section. Okay, drop some questions in there or topics you want to talk about, specific banks, specific credit unions. I know everybody loves credit unions, okay? Drop them in the comment section if there's something that you want me to talk about. I'm gonna add it to the list and we'll knock it down as we go along, because it's all about you, the subscriber, making sure that we make content that you really want to hear about. Okay, now also, don't forget to hit that bell notification. That way you find out every time I drop new content, or when I go live, you're going to hear about it first. And hit that like button. That way more people see this, okay, and hear this. Now, we are a full service credit management company. If you're looking to work on your credit, we did, in fact, create the most advanced DIY program in the industry. At $55.99 a month, our system will create custom Metro 2 attack letters attacking negative, inaccurate, incomplete items on your credit report, including negative accounts and your personal information that is not accurate, okay? Our system will create those custom letters, email them to you, you print them, you mail them out, certified mail, and you're done. It's just that simple. There's no modules to learn or any master classes or those antiquated Facebook groups that you need to join, okay? We cut all that nonsense out. None of that's needed. Our system will create your custom attack letters, email them, you print them, send them out certified mail, and you're done. There's no templates that are being used here, ladies and gentlemen. Imagine that. It's 2023. What do you expect, okay? We do also offer full service credit management, okay? As you can see, we have a full service Metro 2 attack program, a full service pre-litigation program designed to get you a free legal review, and a identity theft program. Link is always going to be in the description, or you could drop it in the comments, ask us for that link, and we'll give it to you also. And as always remember, last part's the most important. Now, really important to understand, this is not financial or legal advice, okay? We gotta get that out of the way. So, I wanted to talk about banking relationships. I feel like we don't talk about that enough. a lot of these people on YouTube or any other platforms just don't talk about how to bank properly. Now, it's really important to understand, you know, we were taught from a really young age to just keep one account, right, for our checking and savings. And we don't go and seek out other type of lending, you know, entities or banks or credit unions. We just stick to that one bank. Now, here's the big problem with that. If you have your checking and savings, and then you have a credit card or maybe multiple credit cards at that one bank, then you have your auto loan, and then you have your mortgage all under one bank. This can potentially pose a problem later, because if you go through the financial hardship, now this entire banking relationship is going to take a hit. Now, what I would suggest to you is you have a bank account for your everyday checking and savings that you're going to have your regular bills go through. Then you have another banking relationship for your credit cards, another one for auto loans, and possibly another one for a mortgage. Okay, sometimes a lot of people just seek mortgage lending completely separate out of their banking relationships, which is perfectly fine also, because we're not here to promote bankruptcy. But understand, if you go through a financial hardship and you need to file bankruptcy for whatever reason, if you have all of your things under one roof, that whole relationship is done. Okay, you're never going to be able to come back to that bank ever again. Now, you may be able to bank with them with checking and savings, but you're never going to be able to use them from auto loan, credit cards, or for a mortgage. So just keep that in mind. It is okay to have multiple bank accounts. Now, I really want to cover how to establish proper relationship banking. I am a huge fan of credit unions, because the bigger the credit union, the better the products, okay? These are not like regular financial institutions like Bank of America and Wells Fargo. People always ask me the question, is my money safe at a credit union? Absolutely. I'm going to put it up on the screen here so you can see. What is the NCUA? The National Credit Union Administration, commonly referred to as the NCUA, is an independent agency of the United States government that regulates, charters, and supervises federal credit unions, okay? Now, your money is insured up to $250,000, just like with the FDIC, okay? Crazy thing, okay? I just heard in my ear that these people that had accounts and businesses that had accounts with SVB, they're going to get more than their $250,000 that was insured. They're going to get all their money back. How? I don't know. What do I know? Okay, so the government has had to step in, because they don't want everyone running to their banks and pulling their money out. Okay, that's a bigger problem. That's why the government had to step in. So, but your money is safe with a credit union. Remember that. Okay, this is very important to understand. Now, let's talk about how to properly establish that relationship with a credit union. This does not work with Bank of America, Wells Fargo. They don't care about how much money or how many different products you use. They don't care about you. Okay, I'm just gonna keep it real. Now, you want to do $1,500 in checking and $1,500 in your savings. That is the starting point. If you can't get to that, work up to it. It's about financial stability. This is what a credit union wants to see from you. People always say to me, that's a lot of money, Mike. Yeah, I know it's a lot of money. And this is what you need to understand. It's not just about your credit, okay? Your credit score is a determining factor of how you repay. Let's just get that off the table, okay? So if you're managing your money properly and you're doing all the right things with your financial institution and your credit, they meet together, they join together to give you those superpowers that you need when you need lending, okay? So creating that financial stability is very important. So when you're working on your credit and you think that, you know, credit's going to be the end all, it really isn't. It has to be your credit and your financial stability come together. It has to work like that. So no matter what credit union you're with, you have to work on your credit, okay? Now, a lot of these credit unions are based on relationship banking. So even with the low credit score, they're going to offer you really awesome products because they have more members. They have more flexibility. So part number one, we said earlier, checking and savings, $1,500. Next step is your direct deposit. You need to be making a direct deposit. Whether you have multiple bank accounts, do a majority of your money going into your new relationship with your credit union. Okay, you want at least 50 to 75% of your direct deposit going in there. If you want to do a 50-50 split going into your other bank account, or a 75-25, 80-20, you get the drift, okay? You want the majority of your money in your direct deposit going into your new relationship with whatever credit union you're starting to establish that relationship, or making regular check deposits, okay? But I'm gonna tell you right now, direct deposit is always king. People always ask me, why is direct deposit so important, Mike? Why do you think? Because the bank wants to see constant cash flow coming in. If they can see that constant cash flow coming in, it makes them feel much more secure. They know you have a steady income, okay? They know how much of the money you're spending, how much is left over. But that direct deposit of that positive cash flow always coming in, they know that it's scheduled to make a hit into that bank account, okay? Paper checks don't always hit consistently. They could be a week off, 2 weeks off, or you decide you just cash your money and you spent it, whatever it may be. But direct deposit is always going to be king. And people just don't understand this. And it's very important when you're establishing any type of banking relationship with a credit union. So always remember, cash flow going into your new banking relationship with your credit union is super, super important. Don't skip that part, ladies and gentlemen. Now, the final part is going to be a secured loan. Secured loans are going to range anywhere from $250 all the way up to $50,000, depending on the credit union that you're choosing to bank with. They're all going to be different. They all will have some type of minimum monthly required payment, or some of them don't have a minimum monthly required payment like Navy Federal, but PenFed does. I think PenFed's is $20 a month minimum payment, or $25. I can't remember. I think it's $20. So your monthly payment can't be less than $20 a month on your secured loan. So you want to do a secured loan that has length. Don't do a 6-month or a 12-month. That's not enough length, because remember, every time that you're adding a new line of credit, this is a new line of credit that is going to report to your credit files. Okay, it's going to report to your bank account and to your credit files. So you're opening up a new account, reducing your average age of credit. You want it to go as long as possible. 2 to 5 years is going to be the best optimal time. 2 years should be the minimum, okay? Now, the amount that you are going to do can range from $250 all the way up to $30,000. Now, it's going to be up to you, but remember, this money is an investment to your future with that bank. So if you have cash flow, this is the time to flex your money on the bank. So this is very important to remember. The more money that you do with a secured loan, the better, because you're putting your money up. This money is going to come right back to you. Okay, this is the crazy part about it. So it goes into a savings, and then it comes back to you once you pay it down. So it isn't like you're losing money here. Now, there are interest rates that come along with this, but if you run this play that I'm going to teach you right now, you're going to minimize your interest rates. And ask the bank, whoever you're talking to in the loan department, to explain to you how the interest works. Because if you can cut down that interest, guess what? You're going to do that. So let's say, for instance, you do 2-year term. You're going to do a 2-year term. Let's say you do $1,000. You're going to put $1,000 into that secured loan. Now, normally speaking, at a lot of these credit unions, you could pay the secured loan with a debit card or a credit card, okay? So if you have a credit card that you like to liquidate, you can do that also. Now, you're going to give them the $1,000. They're going to put it into the bank account. Make sure they do not put it on auto payment, okay? Tell them, no, thank you. I don't need auto payment. I'll take care of it on my own. The loan will become active in 7 to 10 business days. Once that loan becomes active, you pay off 80 to 90% of the loan immediately. So if you gave them $1,000, now you're going to pay off $800. So now you're essentially going to get that $1,800 is going to go back into your account and be re-released back to you. Crazy, right? And you're going to reduce that interest rate, depending on the credit unions you're working with, to a very minimal amount, because now you only have $200, okay? Now you put that rest, you call the credit union back and you say, hey, I want to put the remaining amount of my loan on auto payment for the remaining 2 years or 5 years. Okay, great. We'll take care of that for you. Then you don't have to worry about it. You just have to worry about you making sure that you have money in that bank account and you're perfectly fine. That is how you establish a banking relationship with any credit union, okay? Now remember, we are talking about banking relationships. The more products that you use with this new credit union that you're banking with, the better. The more money that you have, if you have liquidity, this is your time to flex your money on the bank. Put it into saving certificates, into a secured loan, maybe a secured credit card, because guess what? With a credit union, that secured credit card is going to unsecure to a unsecured credit card. Isn't that crazy? And you're going to get your money back as long as you use that credit card properly, okay? This is very different than regular banks. They don't do that with secured credit cards, Okay, so use your money to your advantage. Let your money do the work for you with the credit union that you're banking with. This doesn't work with Wells Fargo Credit or Bank of America because they don't care about you. They really don't. Banking relationships matter at credit unions only. So the more products you use, the better your relationship is going to be because your internal credit score, every credit union has an internal credit score. Your internal credit score is going to rise when you're doing all these products, secured loans, savings certificates. You're doing any type of other personal loans also. All those things are going to help you establishing and making that relationship even stronger with that specific credit union. Before you apply for any products with this credit union, you want to wait at least 6 to 8 months. The longer you wait, the better it's going to be for you. Means the higher the chance you're going to get of getting some type of high limit credit card or a better interest rate on an auto loan, or even better, a better interest rate on some type of mortgage, okay, or personal loan, all right? Because remember, this is all based on your credit score and your banking relationship. So if your credit score is in line and your banking relationship is also, they come together just like that very easily, okay? So you want to make sure that you wait enough time. Now, if you're stretched for time and you need to pull the trigger on an auto loan or some type of credit card, then 91 days is the minimum time, okay? Don't do before that. You can if you got great credit, but you're not going to get the best outcome that you could. You could have got a higher limit. So wait it out, work hard at establishing that relationship, and then go after those products that you really want to get. If there's anything else you want me to talk about, any specific credit unions, any banks, whatever, drop it in the comment section. And always remember, subscribe to increase your credit score.